Hello, today is May 15th, 2021. I know you're all waiting patiently for my disclaimer, but I can't open that window in TradeStation, so I'll just tell you this is my trading plan for Monday, May 17th. All trades should be at your own risk because I can be completely wrong. If you like the channel, please click on like and tell your friends. Well, let's go over the calls. Here's what we said Thursday night. We said bulls need to gap and promptly overtake the day's high to continue the pace. Said the commonest thing was a gap and prompt move outside the day's range. So if they did gap and overtake the high, it was a gap and quick move outside the range. We also said had we gapped under this low, it was a potential crash, and we'll come back to that in a minute. This is the pattern with the early high. It tends to be a rally day, high a day in the final hour. That's a high at the right time, but it's not a high of the day. Now, that's negative, but time doesn't run out until Monday's open. So if we gap Monday and take out this high promptly, everything is fine. But if we don't, it's a negative pattern. We should see lower prices. MEJT says it's saying the same thing. If we don't gap up smartly, we should see 4169.92, and that's my call. I said Monday has the early low. Let's take a look at MEJT. Said this rally won't stick. We should undercut this line, 4169.92. Now here was this break on Wednesday. We needed to go 1 cent under that close for confirmation of this break, which I considered a major break. That never came. I said we could retrace to this blue line. That was around 41.58 cash, and that's where I thought this recovery was going to stop. Not just because of this trend line, but because I had a fib target there. So it's actually pretty impressive that we went over it. But just going over it alone isn't enough. You have to confirm this by going 1 cent over this close, and frankly, you really want to go over some of these highs. Now, maybe that'll happen, but if we gap down Monday, this break doesn't really change anything. It doesn't really count. Now, here was why I thought 41.58 was so important. Here's what I had for A. Here was my B, and C equals A around 41.58. And we went through it. But that isn't the only way to count it. And if we count this from A, B, C for B, you've got C equals to A right at this high. So it's another candidate to end this recovery. It doesn't help that we couldn't clear the point of the April FOMC announcement because this tends to separate rallies from declines over the ensuing weeks after the announcement. There are a number of things about this rally I don't like. Wednesday's pattern, a pattern which is usually positive, was weak. Usually it's followed by more weakness. That hasn't happened. Here's a gap from this straight move down. That's an unstable base. It has to retrace at some time. Here's a hole in the wall gap. These things will fill, and usually they fill pretty quickly. Usually before Monday's close or at the latest Tuesday's open, we trade under this low and find support there. Now, if it doesn't fill in that time period, it doesn't have to fill anytime soon, but it should fill at some time. And this just summarizes what we said. So that's one count compatible with this recovery being over, but of course, if we keep going up, that idea is killed. But that's not the only count. This is a crash count. Here was our high at the fifth wave. This has us making an ABC. wrote 1 here. This is, you could have this as wave 1 and 2, and you could have us in a third wave. And that could be the end of 1. This could be an ABC for 2 of red 3 with good fibs, the A, the B, and the C. This wave 2 retracing 50% of the decline in the initial drop. And if that's the right count, and of course we don't know it is, then we should be in a third wave of multiple degree on the downside. And that's the type of wave formation in which crashes occur. So the bulls really have to keep this rally going. They need to clear this high ideally by gapping over it. Because if we gap down, and if that's the right count, that gap should fill, that gap should fill, we should undercut this low, and this would be a third wave of multiple degree with a potential huge fall ahead of us. It's not the only way to count it, and it certainly doesn't break any rules. Monday's pattern has the early low. We could gap up. There's a lower MEJT target. Unless we gap up sharply, it's favored to print. The strong rally over the past 2 trading days has an unstable base. It should retrace at some time. Friday's high did not clear prior highs, stopped at a point in the pattern compatible with the sharp decline. Bulls need to continue the rally here. Clearing strong resistance at 41.58 cash was the first step, and we might go higher. But if we drop right from the open, if that happens, and Friday's high holds, we could erase all of the recent gains and a lot more. When you rally all day on a Friday like this, particularly in this bullish pattern, it really should continue higher. But if you gap down smartly instead, that's the kiss of death, really, as far as I'm concerned. So we're going to have to see if we gap up, take out these highs promptly, in which case we go higher. Or if we gap down, because if we gap down smartly, you could have a crash on your hands Monday. Monday's pattern has the early low. The only call I'm going to make is 41.69. 92 should print if we don't gap up smartly. But we have the conditions for a crash here once again, if we gap down smartly. And that's today's call.